It's 10 a.m. in Lagos, Nigeria. Good morning and welcome to another 55 minutes of current and relative business conversations, and it only happens here at Business Morning here on Channels Television. I'm Ini John McQuarrie. The first conversation we're having is oil prices. It extends losses on Wednesday as a much bigger than expected surge in the United States crude inventories and expectations of further interest rate hikes sparked concerns over the prospect of weaker fuel demand and economic recession. Brent crude futures slid 72 cents to $84.86 a barrel, while U.S. West Texas Intermediate crude futures shed 68 cents to $78.38. U.S. crude inventories rose about 10.5 million barrels in the week ended February the 10th. That was on Friday, and that's according to market sources citing American Petroleum Institute figures. The build was much larger than the 1.2 million barrels rise that some other analysts polled and had expected, potentially pointing to a drop in fuel demand. Gasoline stocks rose about 846,000 barrels, while distillate stocks rose about 1.7 million barrels, and that some of the traders gave this numbers. We're still talking about global now, but India, their wheat production is likely to rise for the year by 4.1% to a record 112.2 million tons, and as higher prices prompted farmers to expand crop growing areas with high yielding varieties, and the weather remained favorable. Higher wheat output could help the world's second biggest producer of the grain in replenishing depleted inventories and bringing down prices from record levels. India, also the world's second biggest consumer of wheat, banned export in May after a sharp sudden rise in temperatures clipped output, even as exports picked up to meet the global shortfall triggered by the Russia-Ukraine conflict. India's wheat output fell to 107.74 million tons in 2022 from 109.59 million a year earlier. Well, let's come to Nigeria now. Economic advisory firm, the financial derivatives company, forecasts Nigeria's headline inflation to increase to 21.42% in January from 21.34% in December, amid scarcity of fuel and naira, as well as pre-election jitters. However, food inflation is projected to be up marginally to 23.64% from 23.74%, in line with consistent fall in global food prices, while core inflation is expected to jump to 18.73%. FDC lists exchange rate, supply shocks, and fiscal deficit monetization as major drivers of inflation in the country. According to the FDC, the cumulative 600 basis interest rate hike by the CBN appears ineffective in tackling inflation, as it recorded only a slight decline of 0.15% in December, the first decline in almost a year. We are expecting official inflation figures for January from the MBS later on today. We'll see if the FDC has predicted right. And of course, over the next couple of days, we will discuss how that affects you. Of course, we do expect that being January, we started feeling the issue of the naira, and some of the impacts on prices will be captured in that. But talking about the naira, we do know that the central bank governor did categorically state yesterday that the old naira is no longer a legal tender, and also listed how you could deposit your old naira between 15th, which is today, and 17th, the next 2 days, at CBN offices in 36 states of the Federation. It will also require that you fill a form, generate a code, which you will use, and then whatever value of the old naira that you deposit at the CBN, not at the deposit banks, at the CBN offices in the different states, it will be deposited into accounts that you give to them. And also noted that there's no third-party depositing of the old naira. It has to be an individual doing it for themselves. And of course, this is all in the face of that Supreme Court order, which said that the old naira should remain legal tender. We've been having a lot of conversations here on Channels Television. If you watch the 2023 verdicts, which just ended before now, had a lot of lawyers comment on this. As we speak, the Supreme Court is meeting on this matter, and we hope to get our correspondent there to either join in on Business Morning or subsequent bulletins on Channels TV to give you updates on that. So, you know, Channels Television is where you should stay if you want to know what's really going on. Meanwhile, let's take the CBN governor yesterday, where he was talking about the CBN stance on old Naira.
This is the first time that members of the diplomatic corps will be having an official briefing on the redesigning of the three highest denominations of the Naira. The issue has generated a lot of controversies recently, and the Minister of State for Foreign Affairs explains that the federal government is not oblivious to these challenges, adding that the government is seeking on ways to resolve it.
We believe that it is our responsibility as a nation to make it easier for you to function in Nigeria. And therefore, after the central bank governor would have apprised you of what the policy is all about, we want to give you an opportunity to also interact with the CBN governor to ask questions that are pertinent to this policy.
The central bank governor has been in the eye of the storm, especially after the Supreme Court ordered that the Apex Bank should suspend the February 10 deadline, pending the determination of a suit filed by some state governors.
The CBN is working hard to shift pressure, to shift resources to those areas in order to ease the tension. The situation is substantially calming down since the commencement of the over-the-counter payment to complement ATM disbursements and the use of super agents. There is therefore no need to consider any shift from the deadline of February the 10th.
The idea behind the policy is the concern for the economy, insecurity, and election spending.
We have told the EFCC, the ICPC, working with our CBN monitoring team, to arrest any POS agent that charges any fee, because we had made it clear that whatever is their fee, which is not meant to be more than 200 naira for any amount you exchange, that we, Central Bank, we will pay as part of the cost to lessen the burden of this problem.
The meeting then goes into a closed-door session. The Apex Bank is optimistic that the Naira redesign policy is beneficial to the nation's economy and calls for the support of all Nigerians to make it a success.
Obviously, an ongoing conversation there about the old Naira, the new Naira, redesigned Naira, especially as the elections come closer. And as I said earlier, we will have our correspondent join us either on Business Morning or subsequently here in Channels Television. You can be sure to get information on what's going at the Supreme Court, which has started its sitting. Remember, some state governors did take the federal government to court on this matter. So we'll give you updates subsequently. Just stick to us here on Channels Television. Meanwhile, another burning issue to do with the economy is the decision of the National Assembly to amend the Constitution and allow states to generate, transmit, and distribute electricity in areas covered by the national grid as an excellent development capable of improving power supply nationwide. Well, this issue, electricity, has been on the concurrent legislative schedule of the 1999 Constitution, but the federal government has, over the years, well, you can say how successful it's been, how much power you've had, you know, in your area. Well, we have someone to help us discuss the possibilities that come from this move if it eventually goes through. Joining us here in the studio, the Managing Director of Welbeck Electricity Independent Power. Thank you so much, Mr. Afolabi Ayela, for your time this morning.
Thank you for having me.
So, I mean, we're all caught up with the Naira crunch and, the feel, and obviously election, which is, I think, is about 10, 11 days left.
Yep.
Do we have time for this now?
I think we do, and I think it's an excellent development. However, I would say that we shouldn't be too expectant of too much change very soon. Moving electricity generation, transmission, and distribution from the exclusive to the concurrent list means that states will now be expected to bring about regulation that will create an enabling environment for investment. So we're not expecting the states to start putting money into building power generation plants, into building transmission or distribution infrastructure, but we do understand that each area, each state of Nigeria is peculiar to itself, has its own peculiarities, and therefore each state should be able to make subnational regulation that will run concurrent, side by side with the national policy on electricity.
But do you see this administration going through with this legal process, or you think, we'll be so caught up with election matters and the Naira matters that it will have to move to the next administration?
I think legally, getting everything in place legally, I believe it should be done before this government term ends. It's something that can be done, but like I said, we should actually expect changes, we should actually expect improvement maybe later in the year.
So you said we should not get our hopes too high, because even when it goes through, hopefully I use the when it goes through, it will not be states handling it per se. It will just be states making the environment conducive for the private sector to invest. And that can be a source of worry, because we have businesses already complaining that the environment is not friendly enough. Then what is the assurance that there will be a conducive environment for this same private sector to be able to get into the power, which is very capital intensive, to start with?
I think, first of all, sustainable, affordable electricity is crucial to see GDP growth. If we want to see GDP growth, if we want to see Nigeria develop, we must have energy. We must have affordable energy. It needs to be available to all. Again, there must be cost-reflective tariffs. One of the issues we have at the moment is the tariff is not cost-reflective. Once that happens, you'll find that more people will come in and invest. We'll find foreign investors that will come in, bring foreign money, and invest in this sector. So there's certain things that maybe the federal government hasn't been able to do that the state will be able to do. So in a state like Lagos, where you have a high GDP for the state, you have a high level of industry, high level of production, that's very attractive for independent power producers like myself to come in and build power plants to supply off the grid. But in order to do this, the state has to come in and really look at the tariff, look at the cost of investment, look at what will be a suitable return on investment for those investors. Taking into account all of those factors, they can come up with their own tariff, their own pricing for Lagos State, which may be different to a state like, for example, Bayelsa. In Bayelsa, maybe the electricity can be cheaper because you have more access to gas. If someone is building a power plant there, they have the gas right there, unlike us, who have to pipe gas from south up to Lagos.
So I hear you two different fronts there. You talked about the cost-reflective tariffs. The discos are complaining of that as we speak. They say that's one of the reasons why they cannot. And then on the other hand, I also hear you say, without power, of course, you can't expect your GDP to grow. And electricity has also been viewed as a social product, which is why the government had that subsidy to try to make it, accessible by everyone and every social ladder. So how do we merge this now? We already have subsidy we're struggling with on petrol, so we don't want, that route anymore. How do we now get investors, assure them they can get a cost-reflective tariff, but not get the people, to lose out of it? Because if really it's going to be a cost-reflective tariff, a lot of Nigerians may not be able to afford it. That's the truth, because of the infrastructure that is required, especially at the initial stage.
I think you'll be surprised to find out or to learn what Nigerians can actually afford when it comes to spending on power, because of what we're spending already. To power a diesel generator, you're going to spend roughly four times the current electricity tariff in Lagos. You'll spend currently 4 times that. So for petrol, it's slightly lower, but once the subsidy is removed in June, the cost of generating power with the petrol generator will be the same as diesel, so about 4 times higher than the current tariff. That's what people are paying already. It may also surprise you to know that in Lagos, we have 21,000 megawatts of installed diesel generators. We average national production, it averages at about between 4,000 and 4,500 megawatts. So you can imagine 4 times that is what we've bought and installed in Lagos to cater for when there's electricity outages. So people are spending a lot of money. What we find that when we go to customers, whether they're residential or commercial or industrial, we often find that what they're spending on electricity, their mix of PHCN, the privatized PHCN, and diesel or petrol is much higher, significantly higher than the cost of us generating electricity and selling that power to them. So I think one of the things we need to do is really study and look at how much are Nigerians paying for electricity in their homes and in their businesses currently. And even if we increase the tariff to have it cost reflective, is that going to be lower than what they're paying at the moment? We need to have a look at that and then have that discussion.
All right. Then one of your major sources as an independent power supplier would be gas.
Correct.
Gas is a challenge now for supply and all of that. How will it be different because you're an independent or a private sector? How will it be different? How will you be able to easily and get sufficient gas, With
the passing of the petroleum industry bill into law, the gas sector, the gas industry has been deregulated. So now gas producers in the Niger Delta can sell directly to electricity or to gas users, whether in the southwest, in the north. Gas production is increasing. The government is doing a lot for that. Gas is being extended from Ajaokuta up to Kano. So that means that soon industries in Kaduna, in Kano, will now be able to use gas to generate electricity rather than using diesel. The fields offshore Lagos are also producing gas. One pipeline has been built to Dangote refinery. We expect that more will be built, so there'll be more gas available. But then it's also important to note that there are other ways of producing electricity. We ourselves are going into solar, and we're later in this year bringing in fuel cell generators. Fuel cell generators run on methanol. There's no combustion, no moving parts, and almost zero emissions. So we're very concerned with reducing emissions, finding more efficient ways to generate power as well.
So how do you see this working, the evolution of power to the states and having the private sector run the power? How do you see it? Do you see the national grid, now useless? do you see individuals maybe going to communities? Who will be regulating? Now we have the NERC. Are we now going to be having regulators in states, Just paint a picture of how you see it possible.
For now, we're not sure until the state assemblies pass their own laws. We're expecting that Lagos State is passing their own law very soon. Once that happens, we'll have an idea of regulation. But like I said, there has to be a national policy and a subnational policy. The transmission network that is still owned by the federal government will always have its use. You can't duplicate that infrastructure. You can improve it. They may want to even concession it, but that infrastructure is there to stay. There will be a national policy, there'll be subnational policies. So just like we have federal roads and we have state roads that run side by sides, the federal roads the highways have their own job, the state roads have their own jobs. So I see states getting more involved in distribution and independent generation. Because for independent generation, the states can promote that, they can foster that. I mean, one of the ways that they could even get involved is providing land. So for example, if you have an area that needs power, that has a substation owned by one of the distribution companies, the state government might say, okay, we have some land here, let's find some independent power investors, let's bring them in, maybe give them some concessions, some tax breaks. They can build the plants, they can work with the distribution company, and people get their power. Wherever there's a long distance to wheel that power, we can work with the transmission company. So I see for the future, all of us working together, the federal regulator, the state regulators, the independent power producers, as well as the distribution and generation companies.
All right, we do hope that dream comes true for the betterment of all Nigerians and businesses. Thank you so much, Mr. Afolabi Ayila, the Managing Director of Welbeck Electricity Independent Power. We'll see this through. We'll see where it takes us from the law and then, of course, the implementation of it.
Yes.
Thanks.
Thank you very much for having me.
All right, let's take a break now. When we come back from the break, we head to AFEX Commodities Markets Update on next. It's AFEX time now, and we're joined Eniola Akindele, market data and research analyst, who is in our Abuja studio to give us updates or details for the market ended the 13th of February. Hi, Eniola. Good morning.
Good morning. Hi, it's nice to be here.
So you want to give us details of trading for the weekend at the 13th?
Okay, thank you. For the last trading week, we saw a bullish performance across our key indicators as inventory activities increases by key commodities processors. This is reflected in our total turnover as it increased by 25% to close out at 6 billion naira. And also, the total number of these also increased by 72% to close out at 305 contracts. For our key indexes, we saw that our commodity index declined by 4.6% as commodity prices aligned with the open market realities, while our export index, however, increased marginally by 0.4%. For volumes traded on the exchange, maize and soybean accounted for over 75% of the total volumes traded. For commodity prices, we saw a mixed performance. Paddy rice and cashew nut were the gainers, with both increases for average of 5% over the last week, while maize, soybean, and cocoa declined. Maize was the top laggard, declining by 3.7% to close out at 230 naira. The prices of our other commodities remained flat. To know more about us, kindly visit our app and download our app on Play Store, Comex, and also visit our website www.africanexchange.com. Thank you.
Thank you so much, Eniola Akindele, market data and research analyst with AFEX. Thank you for those details. Now, still staying with AFEX, obviously talking about agriculture, it's no longer news that the country, Nigeria, is blessed with several agricultural commodities: cocoa, cotton, palm rubber, sesame seed. Most of this we see on AFEX Commodities Exchange: cashew, sorghum, millet, and these are supposed to help the economy to grow. However, the logistics industry is poised with significant challenges such as reliability and inaccurate and untimely delivery. Talking about logistics and the disruption, especially coming from the war in Ukraine. The major issues faced include source financing and export contracts, payment solutions with an international buyer, trade terms, documentation, and licenses. AFEX is in the midst of all of this. And so we have Emmanuel Akubueze, the commercial manager, export markets with AFEX, joining us now to tell us how AFEX has been handling these disruptions that have been happening in the logistics space. Hi, Emmanuel, good morning.
Good morning. Thank you for having me.
Good to have you. So give us a little bit of background about, this logistics issues, how AFEX has been handling it, which I know has been compounded by Russia's invasion in Ukraine. It's made things worse. But how has AFEX been handling it?
I mean, we've tried to handle our logistic issues. Is something that we've been trying to build since the inception of AFEX. We have an amazing team, Ajia and his team. They've been doing amazing work in trying to circumvent some of the challenges we've been facing in the logistics industry. Aside what's happening in Russia, we know we have a plethora of inefficiencies in our own system, roads. Over the last year, we've been battling increases in prices of diesel, petrol, and also that that has exacerbated the issue of the logistics network. And then, quite frankly, the logistics industry in Nigeria is not as organized as it should be. The organization is very low. Funding to logistic companies is also something that is very slim. But at AFEX, we've tried to work with partners, in the industry, and also created networks of our own that, try to see us go above some of the issues in the logistics space.
Policy for agricultural commodities, how does that encourage local exports?
So you find that tax policies are guiding principles, right? That governments roll out to stimulate the economy. And we've done well, I would say. The Nigerian government and most of the stakeholders, the NEPC, for example, they've done well in rolling out some of these policies that are geared towards saving some costs for investors and just make the industry in general a little bit more attractive. I think one policy I can point to that everybody knows about is, say, the 0% import duties for mechanizations or for equipment for mechanized farming, for example. That has made the industry a little bit, more open and more relaxed for investors to then come in, and they know that they are going to be saving costs in importing some of these equipment into the country, and then efficiently produce. Because one thing we have to do in export is efficiently produce for the international market. And some of these things, some of these policies, rather, that the government is rolling out has seen, the industry benefits in some ways, right? You see that over the years. Past 2 years, for example, the export of agricultural commodities or non-oil export commodities has grown, right? Last year, NEPC recorded that we exported about $4.8 billion, and that's up from, I think, $4.6 billion the previous year. So I think some of these policies, in general, are making the industry a little bit, more welcoming to new players in the game.
Yeah, welcoming. But what about the access to funding? How easy or difficult is it for especially those who just want to get on board?
So I think that's one of the major issues a company like AFEX is solving. If you look at the mandates that we are working on, or we are providing, access to infrastructure, both physical infrastructure, tech-enabled infrastructure, and more importantly, financing, for players in the industry, right? So we are about 46 days, for example, into the new year, and FX Commodities has moved about 50,000 metric tons worth of commodities, right? So to put that into perspective, over 2,000 trucks. So new players in the game can come in and plug into that network, right? We are making logistics a little bit more easier for players in our ecosystem. And in terms of financing, like you said, it's also something that we are giving access to players in the game. Newbies can access funding, whether it's through input financing, whether it's through credit limits, credit lines, or liquidity, right? It's something FX is trying to solve in the industry, and we are trying to do that. And I think other people in the financial industry, they're also trying to, because we see that agriculture is a big part of, our GDP. And so everybody's trying to put in their 2 cents in solving the problem, but it's something that FX is facing, well head on.
Like AFEX and some of these private players you've mentioned, what else is missing? What are we missing? Because obviously agricultural exports, we can't even say it's on the average when we look at the potential that the country has. What are we missing as a country?
I think something that we are missing would be collaboration, right? And we have to move away from the way we do business. And again, it's something FX is playing towards. We have to look at doing business from a shared value perspective. And then what that simply means is that everybody in the industry needs to come together, to find the solution. And we have to really work together as opposed to competing against ourselves. So the government, has to sit with, the players in the industry, the communities where, these farms are. We have to sit with them and hear from them, and they also hear from us. And then we see how we could, utilize policies that the government, they are rolling out, and, some of the things these private organizations like FX, where we are rolling out, and then hear also from the local communities. If we don't do that, if we don't look at this from a shared value point of view, I think we'll still be average. Right, so we see that a lot of companies in Nigeria, most especially, they have to backward integrate because there are lots of inefficiencies, throughout the value chain. It doesn't have to be. Somebody can create solutions that are, viable in the logistics industry, the logistic arm, for example. So while someone else is thinking about production, but in Nigeria, most people would produce, you transport, you export, you package. I mean, it's just a lot of stress, for businesses, but with collaboration from each of the stakeholders, I think we can get ahead of it and, boost the Nigerian agriculture sector to what we know it should be.
I guess, some companies want to get all the money, so they take care of everything in their value chain.
Exactly.
Thank you so much. Emmanuel Akubeze, Commercial Manager, Export Market with AFEX. Thank you so much, and enjoy the rest of your day.
Thank you. You're fine.
Let's take a breather, then we'll head to another market. Well, the next market now is the money market in Nigeria. We have Anyete Edet joining us now, who has been very happy because the equities has been doing well in spite of all the turbulence, the no naira, the field kill, everything.
The macroeconomic environment, Nigeria's macroeconomic environment.
I guess this is where a lot of Nigerians are hiding their money against the election and waiting until after the election, and then they just get it out. And
well, I think, for us, we can only guess whether Nigerians are putting their money there, because we have other markets. We have the fixed income, we also have the equities market. But I think our analysts will be telling us more about that. But what we know is that so far the market has, in terms of month to date, it is 2.4%, and then year to date 6.3%, which is very, very good, defying
that bull run very strong in the market.
Exactly. Okay, so Tuesday's trading session, we're in midweek trading session, but for Tuesday, the market has sustained that uptrend that we saw. It started the week. Previously, we had 0.07% increase, but now 131.64 basis points or 0.24% is what you see here. And then approximately 72 billion naira. What we had is 71.7 billion naira. But when you look at it, it's approximately 72 billion naira. And then, of course, the market's total capitalization, the total value of equities listed on the NGX is gradually racing towards the 30 trillion naira level, of course, and this is coming in the midst of a mixed trading session for the market. Take a look at the sectoral performance there. It was a mixed bag. We had the likes of MTN was actually what lifted the market. MTN's share price was up by 1.49% or 3 naira 60 kobo in terms of value. And then, of course, we also had the likes of Oando, we had the likes of Lafarge, we had the likes of Flour Mills as well as Guinness. So for total, we had 17 gainers in contrast to 19 losers, and those losers comprised of some tier 1 lenders. Zenith Bank was there, UBA was there, FBN Holdings, GTCO, and then of course we also had one of the market bellwethers, Boa Foods, which was one of the reasons why the market, kind of was supposed to be in the red, but it was a battle of the titans, which is why you see the markets across the sectoral performance there, mixed performance. So now the losses from those other tier 1 lenders made the banking sector index of the all share of the NGX to be more than half of a percent in the red, while the consumer goods sector, as I mentioned, the likes of Lafarge, WAPCO printed the green color on the industrial goods counter, as well as Guinness's share price, which rallied the consumer goods counter. Now, in terms of activity was also in the green. Take a look at it there. Volume of activity increased in contrast to what you had on the previous day, 26.33% at 177.9 million units. Value also up more than 80%, and deals up by 1.80%. So that's it for that market. Let's move over to the smaller unlisted securities market. The unlisted securities market, it made another advance, 0.04%, and that's against the 0.07% gain which it had a previous day. So that's it for that market. Total volume was also up by 2.28%. The lone gainer there, GeoFluids, while the top trades there was on the shares of Union Bank Properties, or UBN PLC. So that's it for that market. Now also to the fixed income, we will be talking about the fixed income market, but our attention is on the equities market for today. And to talk us through that market, let's talk to Grillo Abdulatif, who is a research analyst at Meristem Securities Limited. Thank you for joining us, Grillo.
Hi, good morning, and thank you for having me.
Yeah. I'm sure some of us didn't see this coming, although some of us had said, oh yeah, maybe the market might just make some pullback, but it has defied so many projections. The board shows us that the all-share index is very much comfortable in the 54,000 level. Now, what are the catalysts driving this? Because at the moment, what we have is unaudited results released to the markets.
Okay, so the market being above the 54,000 points mark is not only based on what we have seen this week. So from the start of the year, as expected, the market was very much positive. And there's usually that buzz that comes with the start of the year, really. It's called the January effect. And that's just a mix of different things, such as portfolio rebalancing and buying activities into the market, basically, because of the optimism that comes with the new year. So that's some of the reasons why we have seen the market being as elevated as we have it right now. So for in recent times specifically, the market has remained positive still from the start of the year. But for last week, looking at what happened in the market last week, while the market closed positive, it gained about 0.21% on a week-on-week basis. We will note that the mood in the market was much less positive than we have seen in recent times. Looking at the market breadth, we had a lot more losers in the market than gainers last week. The market breadth was around 0.64 times, which is the lowest we have seen so far this year, and it's also the first time this year that the market breadth is going below 1 times. So, and that's not surprising considering the fact that it's just seen generally as the fact that the optimism that comes with the new year is gradually fading away. So that positive sentiment is not as strong as we had it. So while the market still closed up last week was due to buying interest on specific heavyweight tickers like MTNN, we had Danksem, we had WAPCO and Nestle. And as you rightly mentioned, so far, the 2 trading days we have seen so far this week, market has closed up. We had 0.07% on Monday, and we had another 0.24% on Tuesday. So the case on Monday and Tuesday were quite different. On Monday, we had the markets. This is so funny that on Monday that the market closed up 0.07%, the general mood in the market was even more positive than we had on Tuesday. So on Monday we had the market breadth at 1.26 times, which means we saw more advances in the market here.
Okay, Grillo, sorry to cut you because we're running out of time. Just in just 60 seconds. Now we have few days, about a week plus or a week less to the election. And today, the National Bureau of Statistics will be releasing the January inflation data. Now, what are we to expect from the market given these two sides of center focus for investors?
Okay, so for the CPI data, for the inflation data, basically, I would say our expectation here at Maritime Research is for us to see a slight moderation in the inflation rates, and generally, we don't expect the reaction in the equities market to be so much anchored on the inflation numbers that we'll be seeing. We don't expect so much of a reaction to that. And the bigger risk ahead will be the general elections that is coming up soon, because of the tense political climate that might come with the general election. So most investors might normally want to just hold cash. At this point, cash will be king for a lot of investors, or just watch and see till the ending of the election how things go before they come back into risky investment like equities. But then on the other hand, also we are still having good corporate results. We are still having good results coming in, and this makes a case for investors also to buy in the market. So we might just see some sideways trading. Market might just trade sideways this period.
Okay, thank you so much, Grillo, for your time on our program. And of course, we always focus on the market. That was Grillo Abdul-Latif, research analyst at Maritime Securities. So now I was telling you about the fixed income market. We had bearish sentiment across the bond as well as the treasury bills market, because we saw investors sell off the March 2025 paper bond. Average yield there closed flat at the mid and long segments, while for the treasury bills market, there was profit taking on the 23 date to maturity paper. It expanded by 187 basis points, and then the market, the treasury bills secondary market, it closed flat at the mid and long ends segments. And then for the OMO market, average yield there expanded by 81 basis points to 2.1%. And then overnight, for the money market, overnight rate expanded by 39 basis points to 11.2%, despite inflows of 60 billion naira from OMO maturities. So that's it for the market, the three markets that we had our focus on.
Yeah, and we'll certainly wait for that inflation figure, because I believe it's going to, move investors one way or the other, at the close of trade today. And then we'll have the report tomorrow. Thank you so much, Aniti Edits. Let's move to another market now, the crypto market. Unfortunately, Nigeria's macroeconomic factors do not influence that market so much. But one day we will. One day the central bank and the MPC will influence the crypto market, and Nigeria's inflation will influence the crypto market.
But I feel like this whole, cash is king narrative might be played into the crypto market.
Really? How is it looking?
Because at the end of the day, crypto is not even bridging this gap, because people need cash at this point. The technology, not everyone understands
is that a Nigerian
the technology
thing?
For Nigeria.
Yes,
because
in other places, fine, you may not, except for what's that country that made Bitcoin their
they made that legal tender.
I think 2 countries have done that so far. But even in those other countries, they don't trade with crypto. They just invest and
they just invest.
But they do have the infrastructure to carry the need.
Because I remember I was telling you deliver my story, yesterday, showing how much, of a king cash is at this point. I couldn't buy fuel yesterday. I got to the filling station. My network wasn't working. I couldn't do a transfer. I didn't have cash.
Why didn't you do
crypto? I had to drive out.
Why didn't you do crypto, laddie?
It's not legal tender. So you see the issue
you have
here.
The e-Naira.
So we have the e-Naira, but it's not catching on like we would like it to.
Yeah, and I think, I watched the news this past days, and a lot of people are saying we are not against the cashless policy or redesigning of the Naira. We just want the atmosphere or the platform to be ready to capture it. So I don't need cash anyway. Who wants to handle cash?
I don't really.
It exposes you to a lot of insecurity risks, So if you can just do a transfer, use the ATM or POS. We have the AfriGo now.
And AfriGo, that's coming on board.
You know what I'm saying? It's already on board. We just don't have access to it yet.
So once we have access, then we can, see how much of
Nigerians a lot of Nigerians, maybe not all, are saying we're not against the cashless policy. We just want there to be infrastructure to carry the weight.
Just give us some time. That's all we're asking for. Just a little time. But it's still a developing story.
Yes, it is. Obviously, with the Supreme Court today.
So we're looking forward to that, to hear what they have to say. But the market generally, it's neutral.
Still undecided.
Neutral at this point, undecided. But I feel like it's tending towards fear a bit, at this point, that's happening. We got that CPI data yesterday for the U.S., and we know how, the U.S. influences this market. So a lot going on.
And we have our inflation data coming out today.
And
like, watch out for how the crypto market will react to
because January was a rough month. And we look at it there, 53 points. That's what we're seeing in the crypto space right now. If you look at the market cap this morning, still above that $1 trillion mark. Looks like we're gonna fall below that at some point, but it's managed to hold up. 2.55% added to the market cap right now. Volume traded, that's up 5.48%. So a lot of volatility yesterday in the market with the CPI data coming out. We saw the market react to that. We saw some sell pressure. Then after a while, the market bounced back again. So it wasn't that much of bad news, just a slight miss for that US CPI data. Let's look at the price of Bitcoin this morning now, 22,158. We did get to that 21,000. We broke that level below 22K, about 21,500. But it's up 1.83% this morning. Volume traded $29.98 billion. Look at Ethereum. Ethereum, that's about $1,500. We'll flip over to the top alt by market cap. We see it's green all through with Cardano having that big bounce from yesterday. Matic, $1.24, up 5.20%. We see BNB trying to crawl back some gains after the whole issue with BUSD and Paxos and the US SEC. That's weighing on this token here. Talking about Binance Coin, and it's up 1.70%. Let's bring in Gilbert Jokpatana, financial market analyst. Hello, Gilbert. Good morning.
Yeah, good morning, Mr. Laddie.
Good morning, Gilbert. So we got that US CPI data yesterday. Wasn't so far from expectations, but we did see the market, Bitcoin lose some levels yesterday on that news, but it was an immediate bounce, from that. What do you see going forward with that US CPI data?
Okay, macroeconomics remain the key driver for the crypto market, but investors seems undecided after yesterday's data. I know we came out hot month over month, which is about 0.5%, but teams still fall short year on year, which we had 6.4%, and that's hawkish for the Federal Reserve. If you see the approach they have always had to the market. So attention remains on the Fed share speech this week to see signs of hawkishness. Next week's GDP, which is the determinant of if we are in a recession or not. But I think this will depends if the definition of recession hasn't changed. And then next month's new rate hike, which will have a 25 basis point or 50 basis point. But personal opinion, this is bearish. I know smart investors are already reevaluating their position, and we could test the low side of the current cryptocurrency market structure.
And obviously that Paxos issue with the BUSD stable coin, that's still, weighing at the market, on the market at this point. But now they did come out to say they will not be minting BUSD going forward. This must be a bummer for the stable coin market.
Okay, first of all, I think I should say Paxos is a regulated institution overseen by the New York Department of Financial Service and audited by some of the world's top accounting firms. The SEC only alleged that Paxos is issuing a security in the form of BUSD, while there is no actual lawsuit about this. The SEC only thinks that this may be a security. Paxos has come out to deny this claim that BUSD is just a fully backed stable coin, but in accordance with the regulators, Paxos will stop minting BUSD on the 21st of February, while existing BUSD remains fully backed and redeemable. But I think to control feud, I think I should say that this isn't a Binance problem, it's a Paxos problem. No need dumping your bag except you have a strategy for this. But just like the founder of Binance says, CZ, he says with this kind of harsh regulatory scrutiny on stable currency, the cryptocurrency industry may have to change its attention from dollar-backed stable coin to some other countries' backed stable coin. And I don't think this will actually means that the US will be on the loss side in the cryptocurrency game. There may be some mass exodus of cryptocurrency capitalists from the US to other countries with more favorable regulatory playground.
And obviously we've seen, pariah countries trying to move away from trading with the US dollar. We've seen how, the strengthening dollar has affected emerging economies. So you're telling me now that crypto stable coins are also looking towards moving away from the US dollar peg?
Okay, we're actually going through a financial reset. So many things is taking place. We are digitalizing almost everything that we do. And this actually means there'll be a disruption in the way we do things from financial-wise to technology-wise. But just like if you look at the history, whenever an innovative technology comes, entrepreneurs wouldn't adapt to this, always fade away. So also have countries always been. I think this is an opportunity for countries that understand the times to position themselves to take advantage of the innovation and revolution that is happening. And this time around, except the US are able to readjust and adapt as fast as possible, they may just be shooting themselves in the leg.
All right, looking at price action now, what else are you expecting, this week? Any other risks coming up, for Bitcoin price movement this week?
Okay, for the week, I actually think we are priming ourselves and getting ready for a downside. I don't know when this could be or when it's going to happen, but I'm already preparing for a downside from the cryptocurrency market. We could first of all test the 20K zone and the possibility of going lower than this, but 24K have been the major resistance for the market. It's a major resistance for the market, but it may be time we start testing the lower part of the current market structure.
And we did see what happened with algorithmic stable coins in 2022. People did, try to get stability with those coins, and we saw how they depegged, from the US dollar. So with all that's happening now with stable coins, is it still wise to try to get stability with stable coins, or you might as well just be in the wild, wild west with all that swing in the market?
Okay, the cryptocurrency market is an entire ecosystem of its own. These are actually innovators and entrepreneurs providing real solutions to the marketplace. So the same way, I think if somebody wants to use the phone, it's very important you look for credibility. You look for a phone with a track record. It doesn't matter anything you want to do. You're looking for something with a track record, the company that provides something with integrity, and you think they are smart. Likewise, also anybody who is holding gains in the stable coin needs to look for credibility. You need to also look for their track record. There are a whole lot of stable currencies out there, but I think anybody who is looking at stable coins should have to, first of all, find out if these are redeemable. Is it collectorized 1:1? You need to find out if there are regulatory scrutiny on these assets. You need to find out what are the people behind it. You just don't dive into the cryptocurrency market. If you're going into algorithm-based stable currencies that are not collectorized, one should understand the kind of risks you're getting into. But if you're somebody who wants to play safe, you want to make sure you are in stable currencies that are fully collectorized, that do also have regulatory scrutiny, and you want to make sure you know the team and the track record of the teams that back these stable currencies.
So much research before you can get into any of the stable coins. Thank you so much, Gilbert Jopata, financial market analyst. Thank you.
Thanks for having me.
All right, so we see the top gainers there. AGIX topping the counters, up 22.41%. And we see IMX, GRT, also in the top gainers counter. We look at the top losers counter now. We see single-digit losses. So we're seeing some, buying pressure in the market right now, but obviously we still have that stable coin issue, the market.
Stability of stable coin at this time.
Exactly. How stable are the stable coins? That's the question.
Well, okay, that's the conversation for now. I'm sure very soon we'll find stability.
Somewhere. We'll be stable somewhere.
Exactly. Thank you so much, lad. You see at 1:30 for Business Incorporated. And that's it. It's 55 minutes already. How time flies when you're having fun or using it well. But do remember to still stay here on Channels Television. The Supreme Court is meeting to tell us which way to go on that redesigned Naira, old Naira notes, new Naira notes. You get it here on Channels Television. So stay glued here. I'm John Mekwa. I'll see you tomorrow. God's grace.